reported a rather strong set of numbers, and on Friday we had seen a solid up move on the counter when it was up around 15%. But the question to you is, Mr. Nanavaty, that is this performance likely to continue in Q2 as well, given that Q1 and Q2 are seasonally strong quarters for you?
Yeah, so this was the excellent performance was on the back of a very good subsidy support given by Government of India in lieu of rising input cost prices and to insulate farmer from passing on this price increase to them in form of higher MRP. So at least the subsidy support is there till September 22, after which government may review depending on the situation. So most of the performance that we have seen may be repeated. There is some one-off item because when subsidies increase substantially between one quarter and another, there is definitely some impact of this rise. So there are one-off items, but I would say broadly, second quarter with good rain should also uh, show good performance, particularly in fertilizer segment.
Nanavaty, so that's the word coming in, that the government support continues to boost earnings, but your margins have contracted this quarter. They have come in at 17% versus the historic average of over 20%, and that's known because of the higher input costs. But now, since the raw material prices have cooled off, we have seen a bit of decline in crude prices as well. Do you expect the margins to inch back to the 20% level, let's say, over the next 3 to 6 months?
Yeah, prices are softening. Crude is also little bit softening, so we will see some improvement. But as you rightly noted, the along with input prices, output prices are also softening in chemicals, particularly, and the rise that we have seen last year may come gradually or it may not come. But we are trying to have a better value addition through higher exports, particularly in melamine, where the Indian prices are low because of the huge imports coming in from China. So we are trying to get better margin, better realization by exporting melamine. Other major industrial products, caprolactam and nylon, we have a good Indian market. So right now there is no need to export. But we'll see some improvements over a period of time. And as we said earlier, we expect caprobenzene spread to be around $1,000.
Right. Mr. Nanavaty, your company has announced a capex plan of 720 crore rupees in the next 2 years. Could you also give us more details on the expansion, how the funding will be obtained for these projects, and what kind of incremental revenue thereof then can we expect?
Yeah, so right now the projects under implementation relate to ammonium sulfate 4 plant. We already have 3 ammonium sulfate plants, and this will be the 4th one. It is under execution, and maybe next year we will hope to see the production coming out. As you know, ammonium sulfate, only 2 producers are there in the country, GSFC and FSCT. And its imports also don't attract the subsidy from Government of India. So we have a good market for ammonium sulfate, and we hope that with new plants coming in, we will see the higher top line, bottom line going up. Another plant under offering is sulfuric acid 5 plant. This is required to support ammonium sulfate production. So we'll have a 200 metric ton per day sulfuric acid plant coming up. We have also lined up the phosphoric acid, sulfuric acid plant at Sika unit. It will be a larger capex, 1,500 crore to 2,000 crore. It is for producing phosphoric acid to the tune of 600 metric ton per day. As you know, the phosphoric acid prices have marched substantially high compared to last year, around say $500, $600 per ton. Right now it is around more than $1,700 per ton. So the foreign suppliers are reaping windfall gains. Really, it is not backed by such a high costing. So with our own plants coming up at Sikka, this will substantially help in production of DAP and other NPK fertilizers with reduced cost of production of phosphate acid based on our captive plant. Similarly, we have plans for improving the urea production. Our urea plants are 50 years old, so we want to do revamp and reduce the energy cost as desired by Government of India. So that also we are undertaking. We are undertaking HX crystal expansion, which is right now 10 metric ton per day. We want to take it to 20 metric ton per day. This is also based on Atmanirbhar philosophy, where HX crystal is purely imported right now from China. So our higher production will help in reducing the Chinese import. Then we have a huge tract of land at Dahej, where
Sure.
we'll be doing the next phase of expansion. So we are thinking of projects there also.
Great, great to get in that clarity from you, Mr. Nanavaty. And thank you so much once again for taking the time out and speaking with us today on ET Now.
Thank you.
Thank you. Okay.